afternoon, everyone, and welcome to Stock Market Today. Ali Corm and Ed Carson with a breakdown of the action in today's session, where a new rally attempt has begun for the Nasdaq and S&P 500, with tech stocks taking a bit of the lead today, Ed.
That's right. While we came off the highs, it was still a solid rebound. And we're going to take a look at a few stocks that are holding up reasonably well: Datadog, Dexcom, and Microsoft.
All right, well, we will get into that. First, a look at the major indexes. Here is the Nasdaq Composite, which notched a gain of 1.25%. We have the S&P 500 up 1.05%. The Dow up 0.9%, and the Russell 2000 up 0.6%. As you mentioned, though, fading a little bit into the close, but with the sharp declines that we saw yesterday, a new rally attempt with the first day off of the lows for the Nasdaq.
Yeah, volume was below average across the board today. I mean, it wasn't terrible, but that was not super inspiring, not that important. But as you mentioned, Friday we had a bounce, and then Monday that went away. So this is day one. It's day one on the Nasdaq. It's day one on the S&P. So you need to see some more strength before you get that excited, because there's plenty of times you can see one day rallies in a correction. That doesn't tell you it's over. Right. That's why we talk about waiting a few days into a rally attempt to look for a follow through, to then have some confirmation that this rally has legs, and that, okay, now you can really start boosting exposure.
Yes, we need more than one day. And for the Dow, take a look at DIA, the ETF tracking the Dow here. We have a little bit of a different situation because we did not undercut Friday's low in Monday's session. So this is day 3 of the rally attempt for the Dow.
Yeah, that means you could have a follow-through day pretty soon now for the Dow. It is a little odd. We tend to prefer the S&P and Nasdaq to have the follow-through days because they tend to have the leading stocks. So, I mean, right now, energy stocks, financials, and some more commodity type plays are doing reasonably well. So, perhaps this isn't the worst time to have the Dow leading the way on a follow through. But, the Dow at the other end has not been leading the market really over the last several months. It's sort of been lagging. It's just the last week or two that it's done a little better. So something to look for. Obviously, it's nice if you can get all the major indexes having follow through days, and sometimes you have them on different days. But right. It's worth watching what the Dow does in the next few days.
And Ed, for those new to IBD, they may be thinking, well, what the heck is a follow-through day? And why is it important?
Yeah, you want to see institutional support, because it's not that hard to see these one-day advances. You want to see a few days into a rally to have this gain of like more than 1%. There's sometimes we differ on exactly the size, but in higher volume than the day before. And it can be on any one of the major indexes. And you see that the sign of institutions are supporting it. And while it's not a guarantee that that's going to work, there's really not any rallies that work without a confirmed rally. If you just sort of putter along and never have that strong day, you're not really, it's probably going to roll over.
Yeah. And it also doesn't mean pedal to the metal on that follow through day. It means start putting some money to work, testing, see if that is working, and if the market really is moving higher with that new uptrend. But like you said, there have been head fakes in the past. We'll see what tomorrow brings. And let's also check in, Ed, on Datadog, DDOG, and the weekly chart telling a really interesting story here. The gain today came in at about 3.5%, and we can see a nice test of that 10-week moving average. And if you rewind, going back to early August, a strong reaction to the quarterly report, and it's been acting well ever since.
Yeah, it was one of the later ones to sort of start coming under pressure from the market. Not surprising that it eventually did. It's found support at the 10-week line. Look, in a better market, we'd be saying, that looks interesting. It's nice rebound off the 10-week line. Hasn't done that for for a couple of months. And even that one was more like a breakout. So, that's a situation, but it's not a great market. You just don't know. I mean, if you buy here, you're really betting not just that this stock is going to be strong, but the market is going to keep going up. It's one thing to rebound when the market is up 1% plus. It's another thing if this market rolls over. Well, we saw what Datadog did, and it did better than most stocks. most stocks will fall if the market continues heading lower.
Yeah. And what we do want to do, though, during a market that's in a correction and starting a rally attempt is look for these stocks with relative strength lines at highs that are setting up, finding support at key levels. So Datadog definitely on the list in that regard.
That's right.
And yep. And Dexcom, DXCM, also worth noting with its pullback to the 10-week line, down about 1.7% so far for the week. Today, though, it gained about 2.6%, came down to the 50-day line yesterday. That's been an area that it's been finding support.
Yeah, I mean, this
What do
one
you
is
think?
another one is that a lot of medical product stocks had really bad sell-offs, and this did come down, but it found support where you'd like it to at the 50-day line, the 10-week line. As you say, it's basically at the top of the prior little mini consolidation there, which is just sort of nice to have. So this is one that had, it sort of snuck up on us, late spring. There was some early summer because it sort of broke out in light volume here and there, and then sort of took off with a really strong earnings report and kept on going. So this is one that's moving around. It's a turnaround. There were some new products and the pandemic slowed things down, but the numbers are starting to improve. You can see that next year there's going to be stronger earnings, earnings revival. Sales growth is already coming back. So this is an area, obviously diabetes, that is a long-term trend, unfortunately, in this country. So presumably that's a growth area. This has a lot of interesting products to deal with that.
Another one for the watch list. And the action for Microsoft at the 10-week line this week is key, Ed, because it's trying to get back to that 10-week line. Right now, it's about 2.5% below that level. And we saw last week, Microsoft finishing just over 2% below the 10-week line, which we do consider a sell signal, but would be great to see it retake that area this week.
Yeah, this is a different thing than Datadog or Dexcom. This one did not find support at the 50-day or the 10-week line. It's come down. It's trying to come back. It's not that bad. It's if it comes back, it's got a flat base. If it gets above the 50-day line, there's sort of a trend line. You could also see it's getting above the 21-day. If this can get above, now obviously that's good for Microsoft, and if you own Microsoft, but Microsoft and Google, which has a similar look, if these mega caps, which basically combined have like almost 4 trillion in market cap, that would be a really good sign for the Nasdaq and the S&P. If for those indexes getting back above their 50-day line, you sort of need some of these mega caps. They may not be the big winners, but you really need these to at least participate into a rally attempt, presumably to get that going again.
All right. So Ed, what's the course of action for tomorrow's session if we do indeed see a follow-through day on the Dow?
Yeah, again, that part of that is so weird because is that a follow-through suggesting that the market is back in stock, or is that shows you that energy and those other ones, because there still is this a correction or a massive sector rotation? I still feel until we get any kind of follow-through, you should sort of think of it like if you have a compulsion to buy, first get a really green banana and eat that, or an unripe peach. Then if you still have a desire to do it, make any buys really small. You don't have to rush into it. Make those buys small because you don't want to get it and be ready to pull out early, and maybe even consider ETFs instead, like a market ETF, because you don't know an individual stock could suddenly plunge 10-15% if the market goes down 2%. So I would generally try to wait. If this market has legs, you will have opportunities. There's not that much of an advantage to getting in 1 or 2 days early. We've been talking about early buy points, but there's early and then there's too early, especially when the market's not really confirmed.
Great thoughts there, Ed. Thank you all for watching. And if you want more thoughts from our team and you're a leaderboard subscriber or trialist, make sure you head on over to leaderboard.investors.com, because today, starting here in just a little bit, we have our monthly leaderboard scorecard webinar. So I will see everyone over there, and we'll see you back tomorrow morning for another episode of IBD Live, or Daily Morning Live Stream, where our experts are talking about actionable trade ideas and market conditions in real time. So we hope you join us, investors.com/IBD Live. We'll see you there. Bye, everyone.